morning and welcome to today's 5 with Fitz. The markets are down and early going after staging a comeback rally yesterday. Fear, of course, is beginning to creep in around the edges, which is why it is critically important to remember that stocks getting hit hardest often bounce back the fastest and the farthest. Be in to win, or you won't win. Here's my playbook. Point number 1, the DIY, do-it-yourself wave is fading. Now, we knew this was coming. Eventually, the stay-at-home trade would fade away and hit key home improvement retailers when it does. Home Depot rang up 5.8% less customer transactions year over year, albeit at an average ticket that was 11.3% larger according to the company. Despite beating on earnings, the stock is under pressure. Now, I don't own Home Depot, nor am I keen to own it because it's too narrow, if that makes sense. I watch Home Depot closely because the company is an important barometer for retail behavior and for inflation. Point number 2, Walmart scores a double. Now, here's the key. Walmart beat expectations on both the top and the bottom line. A double in my book. CFO Brett Biggs noted to CNBC that customers were, quote, coming out of hibernation, a sentiment I agree with. Travel, party supplies, and apparel all apparently flew off the shelves, as did school supplies like backpacks. What catches my attention, though, is the dramatic increase in groceries. My family certainly contributed to that via the COVID pandemic because we've been utilizing Walmart's handy pickup service almost every single week. Walmart, incidentally, is following Amazon's lead by seeking a cryptocurrency expert to be based out of the Bentonville HQ. Nothing wrong with owning a few shares if you're keen to get in on the action, but I think $140 a share is more appealing if the market provides that opportunity in the weeks ahead. You could accomplish that with a simple lowball order or by selling cash secured puts if you're comfortable doing that. Point number 3, the fastest double on record since World War II. It's tough to think about the markets because on red days, that's a tough emotional input. But it's important that you remember that this data point highlights the power of hope, aspiration, and looking forward. CNBC reports that the rally has taken just 345 days for the S&P 500 to double from pandemic lows. That's the fastest bull market rally on record since World War II. Normally, the average to do this is right around 1,000 days, so this is quite the perspective. Now, predictably and unfortunately, on a related note, anybody who went to the sidelines at the bottom now has another problem on their hands, catching up. It's better not to get scared out in the first place. Point number 4, Bitcoin shows signs of profit taking, yet, critically, it's still up 56% year to date. Bitcoin is off 3.7%, while Ethereum has dropped 3.66% to $45,798 a coin and $3,165 per coin, respectively. Strikes me as simple profit taking. I continue to think Ethereum is the stronger play for the foreseeable future. Point number 5. Here is how I know that Wall Street wants to buy more COVID stocks. Analysts are raising questions worldwide despite growing calls and data supporting booster shots, etc. Now, I don't care how you feel about this, but this is a key point. Bank of America, for instance, stated that Moderna's price should be 75% lower, calling it unjustifiable and ridiculous. This is often a move made when the big boys want to shake this scared money into selling, at which point they, of course, do the buying. My take is do not give them the opportunity unless, of course, you really do want to take profits. I personally think there's a long way to go here. Most of the world is still waiting for a first shot. My choice is still Pfizer, which could see as much as $40 billion top line before the dust even remotely begins to settle. Today's bottom line. Success in the markets comes from 3 simple things. 1, being different and having perspectives others don't. 2, asking questions others won't. And 3, taking risks that hold others back. You got this, I promise. I'm Keith Fitz-Gerald. Let's make it a great day, and I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.